so excited to have you here for building this financial foundation. Whether it is you're just starting your financial journey or you're looking to refine your skills, our goal of today is to give you those practical, actionable steps to feel more confident and in control of your money. So let's get started. So before we dive in, let us quickly introduce ourselves. And I don't know if our guest speaker joined us yet, but if you would like, Pam, would you like to go first?
Sure. Hello, my name is Pamela Smith. I'm a financial advisor with Edward Jones, and I'm so excited to be here and talk just a little bit at the end about kind of the foundations of investing, how to get started, and what to think about.
Yeah. Erica, would you like to go next?
Yes. Hi, my name is Erica. I'm a student athlete at Northwestern University, and I've been extremely blessed to be an intern underneath IDI for Savvy Money Wisdom. So, yeah.
Yeah, and I'll introduce myself then quickly. I'm Ade Chen, and I'm a founder of Savvy Money Wisdom. So I work with women, couples, with immigrants and first-generation Americans. So I help them educate them about financial literacy, but also build the sustainable wealth. So I do one-on-one coaching as well. And today we are going to cover 3 key pillars of personal finance. So it's building a budget that actually works, mastering your credit score, and the foundations of investing. And I just would like to tell you that this actually recording, this workshop, so we will be sharing this with you later. But also, if you have any questions, please ask as we will be going through the presentation. We would like it to be more engaging, more live. So yeah, if you have any questions, please don't hesitate. All right. And before we start our presentation, just a quick but important note. So this is the judgment-free zone. So our focus is on learning and growth, no judgment.
Okay. Hello,
All right.
everyone.
Yeah,
So
Erica,
today, yes,
go
I
ahead.
will be introducing and starting off the presentation by talking about what money personalities are. So I'm going to introduce you guys to 6 personalities. And I just want to state and remind you that you can be one or multiple of these personalities. So what exactly is a money personality? It's actually a set of attitudes, habits, and emotions that shape how a person thinks, spends, saves, and manages money. It influences financial decisions, risk tolerance, and how people feel about their overall wealth, debt, and security. So some of these scenarios and actions that surround and revolve around money personalities can be a bit intimidating, but I just want to remind everyone that these personalities are neither good or bad. We're just trying to build a better sense of awareness of what your habits, strengths, and weaknesses are so that, you can grow and apply effective strategies to yourself. So let's go ahead and start off with some polls. So I actually have some polls generated here, and they should pop up, I believe, in the chat. But it's just an icebreaker, and I want to introduce you guys to some questions to kind of build some self-awareness again. So let's start off by launching the first poll. Just if someone could maybe let me know if you could see the poll on your end.
Not yet.
Not yet. Okay, it says it's live. Let's see. Okay, yeah, people are voting. Here we go.
Okay.
Let's see. Yeah, if you guys go ahead and just put in your votes, answer the question. The first question is, you get your first paycheck, what do you do? You can go get food, treat yourself to a gift, no plan, what happens, happens. You can put in the savings, leftovers for fun, budget it towards a goal, deposit it, keep checking your account balance, or buy something for someone else. So yeah, I'm seeing people voting here. And then just kind of remember your response here because it will reveal a personality trait. Yeah. Let's see, we got 5 people voting here. Just wait a little bit longer and then I'll kind of move on. If anyone needs help finding the poll, just let me know as well.
Yeah, if you go to
Um,
your chat box, it should
Yeah.
pop up there.
Mhm. Okay. Let's see, some more people are voting. Okay, so yeah, first question, you get your paycheck, what do you do? So again, let's take note of your response here. And here are some results to your answer choice. So again, kind of find your answer choice on this slide, and then your money personality will be revealed. And so again, we'll dive deeper into these personality traits, but we have spender, free spirit, saver, achiever, warrior, and nurturer. So again, just keep the personality that you received from the poll just in your mind. Okay, we're gonna do one more question. So we'll do one more poll. It's the second question is, thinking about your future, what matters most to you? Okay, so I'm gonna launch that poll live. Okay, the second question should be in the chat. Let's see. So we have answer choices. We have success and independence, safety and preparation, enjoying life and rewards, caring for loved ones, freedom and no stress, and then security and stability. So again, just think about which of these answer choices matters to you most and aligns best with your values. 6 votes. Interesting. Nice. Okay, nice. So again, keep your response in your head, and the results are here. So find your answer and then find your personality trait. So if you got 2 of the same, then you know you're kind of leaning towards one personality trait. But again, if you got 2 different traits, then you know that there can be multiple strategies applied, and we'll go over that. So let's go ahead and explore these personality traits. Just keep in mind, even though we've done the polls, if you find that other personality traits relate to yourself as well, again, just take mental note of that, and then we'll move forward. So the first money personality we have is a spender. They enjoy immediate gratification. We value experiences or items that bring instant joy, and they rather do that than maybe save for the future. They're generous on spending with others. They enjoy buying gifts, treat family and friends, and maybe see money as a way to show love or appreciation. There's also impulsive purchasing. Sometimes that leads to struggling or budgeting, and then you can't resist a sale and you go ahead and just fall for it, right? And then the last one's motivated with lifestyle and appearance. So that's maybe caring a little bit more about the quality or aesthetics of yourself, and then keeping up with trends, sometimes just to boost your social or self-image, right? The next personality trait we have is a saver. So they value security and stability a little bit more. They feel comfortable when they have a financial cushion, like something like an emergency fund or a clear control over their own money. They're disciplined and cautious. They plan budgets carefully, maybe avoid unnecessary spending, and that can actually benefit, in long-term financial goals. The next personality trait is a worrier. They can be anxious about finances. So they stress a lot over money. You know, they tend to have questions about do I have enough money? Like, when will I lose or run out? Or am I managing my finances the right way, right? So they ask themselves a lot of questions, and they tend to then prefer safe, low risk financial choices, right? So they avoid bigger purchases. And then they can also be detailed oriented but uncertain. You know, they track their spending carefully, but even though they're being super cautious, they tend to be really insecure about their financial situation. So because of these insecurities, they actually seek reassurance. So they ask advice or validation from others to like feel a bit more confident about their financial decisions. And a, a kind of like a scary thing is that they avoid financial matters, right? So avoiding bills because it stresses them out, and then something that they can revert to is getting someone else to handle their finances because of that, right? The next personality trait is a free spirit. These people live in the moment. You know, they value experiences and freedom over strict budgets or any sort of plans. They're carefree, and a lot of their decisions are based off of their mood rather than long-term plans. They're really creative, and they see money as like a tool for enjoyment and self-expression rather than something that needs to be controlled extremely tight. And then, yeah, they avoid structure. They dislike constraints. They can struggle with sticking to budgets or meeting these financial deadlines. So the next personality, or these are the last two personality traits actually, is an achiever. So these people are extremely goal-driven and ambitious. They see, they measure money at, like, with their success. So they're motivated to reach financial and career milestones. So they are extremely hardworking. They plan strategically. They track their progress. They set clear objectives, and they're status oriented. They experience and enjoy, you know, the recognition or lifestyle that comes with their financial success, and can often tie their self-worth to wealth. The last personality trait is empathetic or nurturers, and they are empathetic decision makers. They usually find joy in helping, you know, family, friends, or charitable causes, often putting their own needs before their own. And it's all to build connections, comfort, and security between them and their loved ones. And because they prioritize, you know, these other connections, they tend to also forget about their own financial matters and tend to overlook things and put things off until crisis hits. And then the generosity can, you know, lead to overspending and or being taken advantage of if they don't set limits. So these are all 6 of the personalities. I've kind of given like a little breakdown and overview of what each one entails. But now that we've explored them, and, you know, we've kind of applied to some of your responses from the polls, we can strategize, right? So spenders, they must practice mindful spending, implement a 24-hour rule before purchases, and consider professional support for emotional triggers. Savers must budget for guilt-free spending, balance saving with enjoyment, and celebrate reaching financial milestones. Worriers must build an emergency fund for security, automate savings for consistency, and seek professional financial guidance. Free spirits use flexible budgeting tools, automate essential payments, set financial broad goals. And achievers set financial boundaries within yourself. They celebrate financial milestones and balance your goals with employment. And then lastly, nurturers establish clear financial boundaries, develop self-care practices, and create a balanced financial plan. So these are, again, all 6 money personalities. Take what you can from what I've said. I've kind of given insights on what those personalities contain and some of those tips on what kind of strategies you can apply to yourself. And again, this is all just to help build better awareness into how to handle your finances in the future. So I'm gonna pass this over now to Idai on introduction to budgeting.
Hey, Erica,
Yeah.
this was great. I hope
Yeah.
everyone actually related and found their like money personalities. There could be one or two or even three. But as long as you know what is your strengths and what is your weakness and work on it, so all these strategies will help you how to manage your money. All right. So let's move on to one of these most powerful tool in finance, which is budgeting. But first, what exactly is a budgeting?
Yeah.
Anyone would like to kind of explore? Because we probably hear budget all the time, but anyone would like to kind of share what do they think about the budget, what it is? Okay, I'm going to call on someone, and it will be Layla. Layla, do you hear me? Okay.
Sorry, I was trying to unmute myself. Okay, so what is a budget plan? Oh, that's very difficult question. When you're doing it all the time, you even don't know how to answer on this one. So basically, budget plan, this is what you estimate you're going to spend on certain activities. So basically, you're planning your spend during a certain period of time. So usually budgets are prepared for 1 year, but there could be some short-term planning budgeting or long-term planning budgeting. So it depends what are your goals. And then there are different plans of different types of budgets and the way how you do them. So basically it all will depend what activities you're going to undertake. So basically there is activity-based budgeting. So it's based on the activities that you're planning to do or to have during a year or certain period of time. And as they change, your budget also will change. But yeah, as soon as you establish the budget, you need to stay within the budget and do not overspend.
Yeah. Yeah. Why I called on Layla, because I and Layla, we work together at BP, and she's also a finance person. So no pressure there, Layla. So thank you for explaining. This is exactly what budgeting is. So
You are
just-
welcome.
So simply put, the budget is it's your plan for your money. So it tells your money where to go instead of wondering where it went, right? So it shows like how much you earn, how much you spend, how much you save or you pay for your debt. And what it does is it actually helps you to stay organized. It prevents you from overspending, like Layla said, and it helps you to reach your financial goals. All right. So you probably heard like wants and needs, right? A key part of budgeting is understanding the difference between wants and needs. So it's a simple concept that can make a huge difference. Is there a poll we have, Erica?
Yes, so we
Yeah,
do
okay.
have
Let's
some
see
polls.
what people think about wants and needs. So
Okay.
if you, so Erica is
So
about
yeah,
to launch. Okay.
I'm starting to launch them. Yeah. So there's going to be 1, 2, 3. There's going to be 4 polls on whether you think it's a want or a need. I'm going to go ahead and launch all 4 of them now. So, yep. So the first one is a daily latte at a coffee shop. The second one is internet service. The third is streaming services and subscriptions, and then fourth one's a new phone replacing a functioning phone with the latest model. So let's see. For the most part, everyone's getting it right. Yeah. Wait. Yeah, and again, just if you're having trouble, the polls are in the chat. Yeah. So did you want to reveal maybe the answers? I think mostly everyone. Yeah.
So we can discuss this quickly. For some reason, I'm not seeing the poll on my side. For some
Oh,
reason, I don't know
you
why.
have to go to the hosting, like the meeting tools, like
Okay.
the 9 dots, and then click polls from there.
Oh, okay. Give me a
Yeah.
second. For some reason, I don't see it. Okay, but we can discuss this one. Let's talk about what was it? Latte, right?
So yeah, we have daily latte at coffee shop, and 9 or 10 people said want. Yeah.
Want. That's
Yeah,
right.
and
You're
0
correct.
for
It's
need.
want. Yeah, because you can make coffee at home, right? You can make latte at home too, and it is something that you want. It's not necessarily you need. Well, sometimes we need, but most of the time it's like want. Yes.
Yep.
And the second question was?
Is internet service. 9 said need and 1 said want.
So I would say probably 9 people are correct, because we do need, in this age, we need access to technologies through internet, right? So absolutely, it's kind of one of the necessities. We need to study, we need to work, we need internet for that.
Yep. The third is streaming services and subscriptions. 9 want and 1 said need.
And 1 said need, and okay. So we can debate about it, but I think that 9% who said it's want, I would say they're correct.
Yep. And then the last one was the new phone replacing a functioning phone. So, and 10, everyone said want. Yeah.
You don't need a new phone every year. Yeah, as
Yeah.
long as your phone working, you can reach out to your loved ones, and yeah, you don't need a new phone. So it would be more of a want than need. All right. So it all comes. So like one of the key budgeting, comes to this, like down to this simple equation. So it's your income minus your expenses, and it equals to your savings. And we can break it down. Like, for example, income, it could be like anything that you receive, right, after taxes, you bring home, could be your wages, and we can go for college students in the next few slides. So it will be any of your income, and then you have expenses. Yes, there are like fixed expenses, and there's also variable expenses. And then it equals to savings. Sometimes it equals to savings. Sometimes it equals to paying your debt. So it depends on if you have debt, you have to pay it first before you start investing or saving for investment.
Shoot, sorry.
All right. So how to create your first budget? So the first step to create your first budget is, especially if you're a student or you're a high school student, that when you will go to college, you probably will receive somewhat money. It could be your grants, it could be your scholarships, it could be some internship, maybe side hustles, some allowances, maybe you'll have a part-time job. So it all will go to the step 1, which is the income level. The second one, you have to identify what are the bills that you must to pay. And must to pay, it's one of those like need ones, where you have to pay for rent and mortgage, utility, food, minimum debt payment. Maybe you have debt on credit cards. So that will be your must pay. The third step you have to identify is your spending. And your spending could be a little tricky because you always can revisit them. But based on your lifestyle, maybe you will have to spend sometimes money on restaurants. You go to shopping. Maybe you need some subscriptions, right? And since you're young, you probably will go to concert, movies. You need some supplies and clothing. So because of that, it will change one month to another month. But you have to be always aware where your money is going when it comes to wants. And then there is a rule of thumb which called 50-30-20. You can apply it to your life, but you can always adjust it. Like rule of thumb is like 50 is for needs, 30 is for your wants, and 20 is for your savings. If you have debt, then 20 will go to your debt, and then it will go to your savings. But I would say if you can increase your 20% of saving and decrease on your like 30% or 50% when the need and want comes, it will serve you in a long way. And Pam will be talking about the investment, how it can benefit you in the long run. But again, this is just rule of thumb, but you can always adjust your lifestyle. And step 5 is track your all adjustments. So there is a kind of little tips. So review your budget weekly or monthly, right? So once you're aware about your habits, how you spend money, you can always change them. And always see like what is works best for you. So like, for example, you can use like applications like budget applications. There's so many. You can use spreadsheets, and I would highly recommend to use the spreadsheets before you use your the budget applications. And then but again, it's what works best for you, what which track of the budget will fit your lifestyle.
Good.
Erica, next slide. So these are like budgeting tips. So here's some like the favorite pro tips that to make your budget journey like smoother and more successful. So like follow up that 24-hour rule that Erica was just talking earlier. So before you buy something, and if it is a expensive purchase, just wait for 24 hours before you purchase it. And usually it reduces the impulse of spending. Automate your saving. But we live in this technology world where you can automate everything. Like, for example, set up your automatic transfers for your saving accounts, right? Or for your credit card account. Just put those automatic and you'll pay at the end of the month. I would highly recommend to save all receipts, because when you use the credit cards, it's very easy to lose the sight of how much you're spending. But when you're saving your receipts and while you're building that habit, it is very helpful to look at actually physically on your receipts and see what you're spending money for. And then compare prices before buying. This is a very good skill to build while you're still young. Bargaining skills, right? So always bargain for price, always research, always look, because absolutely you will find that like deals, maybe discounts, maybe like better offers, especially if you're going to buy car in the future or house, like always compare those prices. And then schedule regular budget reviews. So many people just skip this step, but I would highly recommend you to make it as a habit. Have it like once a week or once a month. And then once you will have that habit, it will just come so easy and it will come just so natural to you. All right. So always do the budget reflections. So here we can take a moment to reflect. So you can grab a pen, note, or just take a note on your phone. So these questions will help you to create this personal like action plan. So look at your current financial health, right? So what aspects that satisfy this? What and which areas you can improve? How would you rate your current financial situation, like once you do that budget? Saving goals, like make it very specific. Don't go for a big goal first. Like make it very small and very specific. Like for example, I need to save $1,000, and you give yourself like 3 months, and like how much you have to spend like save every month. It will be like $330 a month, and break them like for 4 weeks, right? So how much it will be. So if you break them on those small steps, it is very easy to save and track and build your savings. And then budget challenges, right? So that you can always think like what is working for you. So when you maintain your budget, like when you're creating it, what is working? What is the challenges? What is like really easy for you? And then action steps. I would highly recommend to not having all your cash just in a checking account in the big banks like Chase Bank or other banks. Always have your saving accounts in a high yield saving accounts, because high yield saving accounts, what it does is it actually pays percentage on your cash. So for those goals, for like emergency funds, I would recommend to have them in a saving accounts. And then once you have that good habit of tracking your money, use the budget applications. Yeah, just connect all your accounts into one budget application, and it will just show you regularly where you're at, how much you spent, and it will help you to create those budgets. And I'm going to share some resources when you can actually research and see which budget applications can work for you or fit your lifestyle again. All right. So here we are in an introduction to credit. But before we go to the credit, do you have any questions about the budget? Bema, I think you're saying something, but we cannot hear. Oh, okay. All right. Okay, if there are no questions about, oh, okay, Mirima is saying how to budget. Okay, so Erica, would you mind to put the link in the chat? So there is
yeah.
okay, so there is a link Erica is going to put in the chat. So what it does, it's from consumer.gov website where you can actually adapt yourself. So it actually very nicely lays out like what is your income, and then what is your expenses, and it's actually broken down by like what are your expenses are, and then whatever you have at the end, that is your saving or to pay your debt. And I would suggest you, yes, this is the link. Try this link and see if it works. And once you can always actually do that, and then you can print it for yourself. And I would also recommend, like Layla was saying, then you can do actually budget for 2 or 3 months in advance by using this link. And then Mirima was asking, okay, how to budget if income is not consistent, income is fluctuates. So this is a very good question. So not everyone has like, same income every month. So for that, what I would say is look at your expenses like for last 3 months, right? And do the average. Like for example, we are in November right now. November, October, September. Look for your expenses. Not even October. Take the August, and look for those expenses for last 3 months, and then average them. How you average it? You add 3 months expenses, and then you divide into 3. So that is your average. And then based on that, you can average your monthly income. And because you don't have a consistent budget, you have to always have like extra 1 month's budget in saving. So that what it will give you like very good view, like how much in average your expense are. And based on that, you have to save 1 month just for that budget, but also you will have to have another emergency fund, which is between 3 months and 6 months. If you have a big family, then I would suggest 6 months. But if you're a college student, I would say like 3 months. So that 3 months or 6 months budget, it will cover when you don't have that consistent income, it will cover that your expenses. Okay, budget sheet tracking. Okay. No more questions. All right. Well, if you have any questions, just I think Glazim have question. You raised the hand. Glazim. Oh, okay. No question, Glazim. Okay. All right. Okay. How to fight with being impulsive? Well. Okay, I think you have to ask Erica. You were, Mirima, you were late for this meeting. We already spoke how to fight the impulse. But if you would like, Erica, would you like to talk a little bit about the impulse spending?
Yes. So I actually struggle with impulsive spending. So I guess I could speak from just like someone who experiences it. But again, I think just applying like the 24-hour rule is like the biggest thing. I had mentioned to Idai that I had went, to the grocery store, and there were things that I didn't necessarily need, right? But so I was asking myself, do I really need this, or can I like live without it, right? So that was the first step. right? And if your answer then is that, oh, I need this, right? I think then placing that 24-hour rule right after is highly effective. But I think again, it first starts with just like questioning yourself, right? Like asking yourself these questions and reminding yourself to kind of like be a little bit more aware of what exactly you're doing, right? I think that's like the first step is just, yeah, building awareness, asking yourself these questions, and then just applying the strategies as best as you can. So, yeah.
Yeah, and we kind of briefly talked about like wants and needs. So when it is wants, then you apply different strategies. When this are needs, then you absolutely have to pay for it, right? Yeah. No, it's okay. We are so happy you're here, Mirin. All right. If there are any more questions, if no, we can move to credit. Okay.
It may be not as important. One of the tips that I've learned before to go to grocery shopping to eat.
Oh,
And
yes,
then
that's a good one.
it really helps me. For example, sometimes we buy some spices, some snacks that will be in your store, I mean, in your in the cabinets for a long time and you don't need it, right? But then it adds up to your bill.
Yeah.
And I've just learned, check first your fridge, check your freezer too. Lots of frozen food that we think that we're gonna eat, but we'll never eat it again. So that really has been helping me to eat and then go to do the grocery. I mean, it's just little life hike. That's all.
Oh, thank you for sharing. This is great. I think we all go through this, right? We always, when we are hungry, we always overbuy. So I have a few more to share about that. So also have your list, right? Before you go to grocery store, what do you need? Like you just write that list and try to stick to it. But another life hack one shared with me is when you go to the grocery store, and if it is like small purchase you need, don't get that cart. Just go with your empty hands and try to get, because with your empty hands you can get you can't get too much, right? You just get what you need to get, and that's how you just pay for it and you walk out. Because once you go with the cart, you tend to put this and that and that, and before you know, your cart is full. So these are different methods, but whichever works for you. Yeah, thank you, Ben, for sharing. All right. Yeah, credit card is a very good subject. So now we can shift the gears, yes, and talk about that. And before that, maybe we can do another poll.
Okay, so we're going to answer some true or false questions. I'm going to go ahead and launch. Again, there's a few polls. So if you guys just go in the chat and then answer the questions to the best of your capability. So there's going to be 3, 4. Okay, there should be 8 questions and they're just true or false. So if you guys, again, they should be in the chat. And if you could just go down and answer all of them, that would be great. Yeah, we got some responses. Okay.
Yeah, I know. The answers are good. Your guys are all good. So savvy. Yeah.
We've got some mixed responses on, I think it was the first question. Yeah, 2 people said false. I mean, majority said true, but yeah, there's some people.
Yeah. Oh, that's good. So if you would like, we can start discussing it, right? So what is the credit? So credit is borrowed money. Is it true or false? So credit, yes, it is a borrowed money. It is a true. So 8 people responded true, because it's not your money. You have to repay it. So you borrowed that money. At the end of the day, you will have to pay it back. Then the next question is good credit is only necessary if you want to buy a house. Some said true, some said false. So it is true you need to have that credit, right? But it is not the only. So it's not the only thing. You need a good credit for house, to buy a car, have a car insurance, to have a good student loan, like for example, or to like rate for student loan, or even for credit card. So you have to have a good credit to have that. Yeah, home is also, but it's not the only one. All right. The next question is, you should use credit cards to pay for things you can't fit into your budget. Well, you can say it is not fitting in my budget. I can put it on my credit card, but I wouldn't say that this is the best strategy. So credit card, it has a lot of benefits, but it shouldn't be the like your backup plan. It is your backup plan, but it shouldn't be like your plan just to use it when it doesn't fit your budget. If it doesn't fit your budget, so there is probably other strategies you have to think about, like how I'm gonna pay for it. So that is the next question should come. Like if you cannot afford it, you cannot pay for it. Maybe it is not the best idea to buy it. Okay. The next question is, to build credit, it's best to pay off my credit and balance every month. You're amazing, guys. Yeah. Yes, you should pay your credit card balance every month. It is so important. It's like #1 rule to have a good credit score. All right. And if make the minimum payments on my credit card and loans every month, I will pay the same amount in the end as if I made higher payment each month. Yes, it's false. You're right. Yes, it is not the same amount you will be paying. Well, you can pay the same minimum amount, but it is not the same amount. You have to pay off at the end of the whatever term is. But if you can pay at the end of the month, that is your best option to have your good credit score, to maintain the good credit score. Yeah. And okay, and is it the last question, or okay, your credit involves more than just how many credit cards you have. Yes, that is true. Yeah, you're killing it. You guys good. You know a lot about credit cards. Yes. Okay, and if I had bad credit, there is nothing that will ever fix it. It's false. You can always rebuild your credit. Yes. So there is a few rules you have to know how to do it, but you can always rebuild your credit. So what is the credit? So it is a simplest like form. So credit is borrowed money that you promise to pay back, and it's a key that unlocks many doors like throughout your life. So it is important to have a good credit. So using credit wisely is important, right? So credit card, what a few questions like, what are some things in life that requires credit? So it requires so many things. Like for example, taking out a loan for a big purchase, or renting an apartment, you need a good credit score. Taking a student loan for yourself, or for like if parents here for your children. So yes, it does require to have a good credit score. Okay, next. Okay, what things would having credit be helpful for? It will be helpful for so many things. Over a period of your life, if you have a good credit score, you will be in more advantaged position than many, because you will have a better deal on an interest rate. So like if you are going to buy something so that you will have a better interest rate, you will be saving a lot of money on that. And what is the credit card is good for it? So buying things online securely, because if you use credit card, you can always dispute if your product came damaged or it got lost like in the between. So you can always dispute it and you can get your money back, not necessarily on your debit card, right? So also it is not very safe to just have your carrying the cash. So credit card is very convenient. And again, you can take if you have a very good credit score, you can always take like loans again for school or for something else that you need to buy in your house or for your life stuff. Okay, so it is so important to use it wisely. So credit cards are powerful tool, and if you understand how to use it for your benefit, you will benefit a lot from it. So used wisely, and when you do that, it can help you. But if you use it poorly, they can hurt you like big time. So we can talk more about this and just stay on a track. Don't get into debt don't overuse your credit cards. So here are a few examples, right? What is the credit? Oh, yeah.
Sorry, my fault,
Yeah.
my fault. Sorry.
Yeah, no, it's okay. So take notes of your annual fees and interest rate. When you have a credit card, you do not need annual fee credit card. There are so many. Well, some of them they have with some benefits, but as a student, I wouldn't recommend you to have an pay annual fee for your credit cards. There's so many good credit cards which does not require any annual fee. It's free. And then make small regular purchases on your credit card. Like I usually don't recommend to close your credit cards. So if you have your credit card and you're cautious kind of how to use your credit card, put just your very small subscription, like for example, Netflix or whatever like subscription you have, and just pay it at the end of the month. So your credit history will start just, growing. If you can't qualify for a regular credit card, try secure card. That's how I got my first credit card when I came to United States, because I didn't have any credit score. So I just put like $300 down and I got the secured credit card. What they do is they give you like exactly the same limit that you put there, like $300. And I had that credit card for a while until I built my credit score. And then I was able to get like other credit cards. And then pay off your balance every month. And we will be talking more about this a little later. Yeah.
Yep.
Okay, what is a credit score? So credit score is a 3-digit numbers, so that represents your credit worthiness. And credit score, it actually represents, like almost represents your character. Many companies, when they hire, they actually look at the credit reports. So they want to hire good people like with good characters. And this is like one of the examples, like to show like you're disciplined, you're serious, you know how to manage your money. If you have lower credit score, they may prefer someone who actually has a higher credit score, because it tells them that they're hardworking, they're disciplined, and all the good qualities come with it. Okay. So building good credit, yeah, it's so important, especially in this age when you're in high school and when you're in college. So how do you build a credit score? And so it all comes down to these like 5 key factors. So one is the most important one, which is a 35% that helps you to build your credit score, is a payment history. So as long as you do not miss any payments, you do diligently pay your credit cards, your payment history will record it every month, and that helps you to build your credit score. If you miss one payment, it will stay in your credit report for 7 years, and it will hurt your credit score. So make sure you do not miss it. And there is like a few, like for example, I can give you strategies what to do. Like if you have a credit card, there is a minimum payment option, so that we'll pay like first week of the month or second week of the month, whenever your due date is. Just try to pay it like 2 weeks before that, and it will trigger every month and pay minimum. And then by the end of the your due date, or before your due date, you will pay the full amount. So payment history is so important. And then the second one is a 30%. I don't know if you're hearing, my child is actually trying to get here. Okay, I have to close my door, I'm sorry if you hear him screaming there. Okay, so the second one is a 30%, which is amount owed, that also called like utilization rate. So utilization rate is like how much money you have available to you. You should not use more than 30% of it. For example, if you have $1,000 on your credit card, do not go over $300. So if you spend more than that, it may hurt your credit. So try to use within that 30% of your utilization rate. And another example would be, like, for example, if you have 3 credit cards and like $1,000 each. So how it calculates utilization rate, so they combine this 3 credit cards, $1,000 each, with $3,000. So $3,000 is your maximum. And you can spend up to $900 in combined of those 3 credit cards. Just don't spend more than that. And it will help you to build your good credit score. So the third one is a length of credit history. So like I was saying earlier, do not close your credit cards. Do not. Try to keep it as long as possible. Sometimes when you don't use it, companies just close it, banks, they can just close it. But put your like that small occurring payment there, like for example, for your Netflix or something, like some subscriptions, right? You just pay it off by the end of the month. And the longer you have it, the better it, and it will help your credit score. And then the fourth one is a new credit. So I usually recommend to have like 3 credit cards, and one is like Visa, another one is MasterCard, and third one, whichever you use all the time. Like for example, Amazon, if you buy all the time, or there is like Chase Bank, right? They have like free credit cards, or if you travel a lot, like for example, there is like from Chase, and there is another one from Credit Capital One. So find the one that fits your lifestyle, but I would always recommend to have no more than 3 credit cards. And this is worth to mention. Every time when you open the credit card, it will hurt your credit score because it considers an inquiry. An inquiry will stay for 2 years on your credit report. So what it means is it signals to creditors, oh, this person needs money, this person needs money. So maybe not for a long term, it's going to hurt you, but it will hurt you at the time when you're shopping for it. And then the last one is a mix. So there is different kind of credits, right? So there is installment and there is revolving. Like for example, you have like mortgage loans, car loans, student loans, and then you have a credit cards, right? So these are all different credit loans, and these are the mix. And if you can manage all of them, it helps to build your credit score. Do you have any questions? Let me just check if anyone. Okay. Oh, Mirima has. Okay. What do you think about people who advertise, we fix your credit, pay us monthly fee? Oh, no, absolutely. No, it is not effective. And usually those people, they're just making money out of you because you can build your credit score yourself without involving anyone. So what you have to do is you have to download your credit report from 3 bureaus that we have. You can download 3 every year, and just make sure that you don't have any accounts that open on your name that are not yours. And if you do, you just dispute them. So, but if you do diligently just follow those 5 pillars, you can rebuild your credit score. You do not need to pay anyone to do it for you. Okay, and next question. What do you think about people? Okay, oh no, it is... okay, the next question is, also, if credit card has 1 or 2 years of promotion with no APR, do I still pay off in the end of the month or stretch it for end of promo? So you still have to pay minimum. It's not like just free and you don't pay at all. So you have to still pay minimum, even if it is like with 0, because they have minimum payments. And then once the promo is over, that full amount will go like full APR, whatever APR will be 25%, 35%. So try to pay it before the due date. Yeah. Bema has a question.
So yes, how does that affect on your credit score if, for instance, you have credit card that you have a balance and you're just paying off monthly, but you're not utilizing it at all? How does that effect, and would that hurt your credit score, or that's my question.
So it will not necessarily hurt your credit if you're just paying minimum, right, every month, because credit cards, they're making money out of you, right? So the longer you stay, the more you pay, the more money credit cards. So that's how they make money. So you are very good business for them. So it will not hurt your credit score, but it will hurt you in the long term. And we have actually a very good example after this slide. We are going to show you how it's going to affect people who are just paying minimum. Yep. Okay, and there is another question. Oh, thank you. On increasing the balance is a good thing or not? Yes, it is a good thing. And I would highly recommend you to call your credit card and actually ask them to increase your balance. Yes. So what it will help you is, it will help you with your utilization rate, because you will have more money, and you will still, if you will still spend as little as you were before, it will help you with the utilization rate. Okay. In case back reward taxable, how do I file? What is it? Increasing the reward. Okay. Is cashback reward taxable? Oh, that is a good question, actually. I'm not a tax person. I haven't heard that people actually pay for or pay taxes on it,
No, it's not.
right?
Yeah, you
Okay,
don't pay.
yeah. So I haven't heard. Yeah. But again, maybe it is good to check just with your tax person, because laws change.
Yeah, so it's not taxable either.
Yeah,
So
okay.
it's treated like a discount on the purchase of certain goods. So basically, it's not taxable. It's like you
Good.
go to the shop and you buy something at the discount. This is how
Yeah.
it's treated.
Yeah.
Yeah.
Oh, thank you, guys. Thank you, Leila. Thank you, Janelle. Yeah. Yeah, that's very helpful, because I don't remember me paying taxes, but always I want to just double check. Yeah. All right. So ways to build and maintain good credit score is just kind of like very quick overview what we just spoke about. So you pay your bills on time every time. So you don't max out, that is utilization rate, right? Your credit limits. Don't over apply for credits. So only apply for credit when you need, and use credit card very wisely, and check your credit report regularly for errors. Okay, there is another question. High yield saving accounts. Oh, high yield saving accounts. Actually, Pam may will touch a little bit about the high yield saving accounts, because that is more on an investment part too. Yeah. Okay, so this one is a very good example that Bima was just asking earlier. So we have three cases. We have these three people. So one is Allison, one is Jane, and one is Ben. So they all have 1,500 purchase with an APR of 15%. So Allison, who pays in full amount, so she spent 1,500, she paid 1,500. So within 1 month, so she didn't pay any interest rate, right? So her total amount was paid 1,500. And then Jane, who paid partially, so her total spent was 1,500, and then amount paid every month was $135, and it took her a year to pay it off. So at the end of that payment, last payment, amount of interest she paid was in total of $124, and total amount paid was $1,620. And then let's look at Ben. So what Ben does, he just pays minimum amount. And so he also spent 1,500. So the amount paid every month, it was just $24. And it took him 10 years. So only on interest rate, he actually paid $1,396. And when you combine it with the 1,500, it's a $2,896. It almost doubled. So this how the companies, the credit card companies, they make money. But at the same time, you do not benefit from if you have very high interest rate and you paid for a long time. All right. So this is kind of very quick overview of credit score result. So the highest credit score is 850. So 800 is considered like very good credit score. credits 680 is considered good, and 410 is considered like bad credit score. So just pay attention where you're at, check your credit score. It's free through your banks. You can actually get your credit score nice. And just make sure that, check it constantly. Make sure that you're always staying on top. All right. And because we are talking about the credit score, there is so many fraud right now, especially right now in November, December, when there is a holiday season. So many people can fall to like fraud or some identity theft. So today we have Janelle. She shared her inspiring story of a victim of identity theft. She been many years ago, but she still actually shares what she is going through right now. So Janelle, thank you for joining us. And please, yes, if you can share so that everyone can learn from
Sure.
this.
Yeah, thank you. Thank you, actually. Hello, everyone. Thank you for inviting me, Aide. My name is Janelle, and I've been working in tech industry. I'm an IT engineer since 2021. And before that, I worked for 3 years at a credit union as a loan officer, where I reviewed the credit scores, the one that we just talked about, right? I approved for different types of loans, like auto loans, truck loans, personal loans, you name it. You know, and I've been since then, like firsthand, how important the credit is, how important the credit score is, identity protection, and financial responsibility are that we talk about today, especially when you're just starting your life as an adult life, or especially if you're immigrant and you're young and you just moved to new country, to US, where you have no idea what is the credit score, what is the social security, and as a surprise, you are in America, you end up like, oh, what is that? Like, oh, okay, that's most important thing. And what do I do and how do I do it? So I had a lot of questions. I moved back in 2010 as an exchange student. And legally, I received my social security, as I said, as I not knowing like what is it. So I received it, and it was also my adult life actually, because I've never been an adult in my country. So I came here and I ended up asking a lot of questions, and not knowing, I just started working, and I got married. I went back to my country in 2010. So I worked for 3 months in US. I went back to my country, I got married, and I came back again at the end of the year. And in 2011, I filed my tax for that 3 months because I did more than the minimum amount that I supposed to file my tax. And I did. And I received about $140 back from that month of me working. And back in June in 2011, I started getting pile of letters from IRS. And, it's something personal that I would like to share with you. So, because I know it sounds very scary if you are a victim of identity theft and you going through that at the age of 20 and not knowing, like, while you get those IRS letters every week and you just recycle them, you just throw them because it's not me. And I don't even go through that letter and reading the whole story, like what's going on. But I saw my name on it, and I saw 17,400 something amount that I supposed to pay for IRS. Not knowing, not dealing with the letters, and with my English, I was just not sure. So I throw the letters and I didn't pay attention. And that's how my journey of being the victim of identity theft started. And years passed, not years, actually couple months passed, not knowing what's going on. I kept receiving those letters. And as I said, I didn't understand how dangerous that could be. So after that, since it was IRS, I learned it's something important, and where I file my tax, and I started calling to IRS. And I realized after being on hold daily for 40 minutes, or sometimes I was on hold for 4 hours until I walk to my work. I work, I eat my lunch, still on hold and waiting. I had the ear pods with the strings on it, so I was working with those on because I didn't want to miss the call. Otherwise, they could just turn off if I don't say hello back whenever they answered the call, right? So I was on hold, and I learned after a year that I'm a victim of identity theft. And that's where I started talking with them, and I took IRS to court. So after 3 long years fighting with them, being on hold for so long, and being on court with judges and prosecutors, finally my name was finally cleared, because at the end they don't even let me know. They didn't even let me know who actually stole my social security, how I ended up, but they could only know from background noise I heard that's accidentally someone used my social security, actually, because in my social security there's 7 and there's also number 1. So they mixed up a 7 as a 1 when they were, I guess, writing down or typing. So that's how my social security was ended up using someone who's in New Jersey. So their tax ended up in my bill that I supposed to pay back. So even though the case is closed, the impact still stays with me for life. It stayed still till this day. And after that, talking with IRS and taking them to court, I become very financially educated. I learned a lot. My English improved. I become very mean person over the phone. I learned that being 19, 20 years old, and why I'm saying that, because working as a loan officer, being involved in a social security identity theft, I now know very well my financial, budgeting, my credit score. I check it in the morning, at night, still. Because of that happened the case, I can't file my social security with my social security number, my regular tax return, like everybody else does in US. So every year, IRS sends me the PIN number every single year. I can't use the same PIN number for next year. So whenever I move out of different address than my current address, I have to let IRS know that my address is this. And at the end of the year, by October, I get the PIN number in the letter, because they won't release it online. Maybe they are doing it past the year or this year, but I have to get physical letter and file it with that, because they're going to copy and then send it to IRS every time when I file. Otherwise, if I use my just social security number without that PIN number, that person's debt comes in my record again, and I have to go through that same, I want to say the bad word, but I won't. I will end up in that same boat again. So I don't want to go through that. So, I'm sharing this because identity theft isn't, something that happens only to people, I don't know, who doesn't know, or only to adults with the mortgages and bills and your information is out there. It can happen accidentally as well, or it can happen if someone might stole your social security or credit score. It can happen to anyone. Like today, I know we invited to teenagers, right? Younger generation, but I would like you guys to know that it's not fun to be a victim. So a victim of identity theft. So keep your social security very secure. Don't share with anyone. Check your daily credit score daily. Like I recommend twice a day to check it. Like you brush your teeth, you go to Credit Karma and check it, that someone didn't stole your identity, or open the credit card on their names. It can, once your social security is gone or your identity is stolen, then damage is extremely hard. So, as I said, protect your information, monitor your credit score, build healthy financial habits like we're talking about right today. Don't be spender, be saver, and take this seriously. Seriously, because it can affect your whole life, like in my case, even though it's not my fault, but I end up in that situation, and I hope anyone will be in my situation back how many years ago? 11, so 14 years ago, right? Yeah. My journey was, difficult, but it taught me be careful, responsible, and confident about protecting my identity, because I lock my credit score, so no one can pull my credit score until I say yes, until I click yes, because I get email whenever they try to check my credit score. So ahead of time, I let them know I was a victim of identity theft, so you won't be able to pull my credit score easily. It's locked. And I have to, whenever you check, I have to click yes, that I allow you to check my credit score. And then the third party will be able to check my credit score. Yeah, so thank you for listening. And
thank
I
you.
tried to fit in 3 minutes, but sorry, it took a little bit longer. But I'm
Yeah.
happy to answer any questions.
So yes, I have
Oh.
one question. So you mentioned that you need to check your credit score in the morning and evening. So what you are checking actually, the changes or what?
Yeah. So I'm not kidding. I'm just kidding that I'm checking in the morning and evening. But I recommend check you guys at least every week, because Credit Karma. It's free platform. I create my account there. I go my PIN code. I put my PIN code, and it's gonna take me to my credit score. And then I click on see my full credit score, and I check that there is no new inquiries. There is no new information. Since then, I don't. But I still, since I go through that difficulties, I always try to check that there's nothing new that I'm not aware of.
So Credit Karma is free or it's
Correct. It's
That's
free.
right.
So there is a free credit report
Yeah.
website. And we are going to share these resources
Yeah.
in
Oh,
the presentation.
One more question. Sorry to interrupt. So you also mentioned that don't reveal your credit score to anyone. Why?
Well, what I'm saying is don't reveal social security. Don't share or don't leave your social security anywhere else. Because what if someone gets access to it and then they might do something dangerous with it, or at least open a credit card on your name, right?
So
If
the
they have
reason
your
I'm-
address.
Yeah, the reason I'm asking because my daughter, she has graduated from the university. Yeah, congratulations.
Yay.
Oh my God. So she's now applying for different jobs. And at one job, they actually requested her to reveal her credit scoring. And that was very weird. I never ever come across it. And when you said that you don't reveal your credit score to anyone, I was wondering why, what bad can happen.
No,
So
they
they didn't ask for
probably-
the SSN, for the social security number. They just asked for the credit score. And that was very weird.
yeah, it's the financial institution, or I mean, what kind of university is this? Like, is it due
No,
to
that's the
finance?
job. That's the job she was applying for.
Oh, the job.
Yeah.
I don't recommend, like, job doesn't need your credit score. I don't
No,
think
no,
so.
they do.
They
They
do?
do now.
Oh, I've
Yes, they
never
do.
faced that issue.
So yes, so they actually do require the credit score. So when they have like a few candidates, and they actually will hire someone who has a credit score. And we were just talking earlier about this, because what the credit score is, it's like your character, right? So it tells like how disciplined you are, how responsible you are. So, and usually when you work in the corporations, they give you the credit card. So they have to make sure that sometimes credit companies will reject to give that credit card to that person, which is not good for the company. So credit score is very important. It's actually can determine you if you will get the job, you will land it or not. So
I
it is legal.
I would say too, applying for jobs, I wouldn't give them my credit score or my social security till I've actually been given a job offer and I know it's a legit firm, right? And yes, they may need your social security to do the whole I-9 and the payroll documents, but that's well down the path, and I wouldn't be putting it in like an open website.
Exactly.
Just
Yeah,
personally,
even in
yeah.
IT career, once I got the job offer, once I signed, that's when the W9 form comes. That's when I share my social security number to do like tax work. Until then, like recruiters, any managers, HR, they don't ask your social security. And I don't think it's a good thing.
Okay, thank you so much. And one last question. So you also mentioned that you don't allow anyone to pull out your credit score until you kind of approve it. So how to do that so that no one kind of pull out credit score without your approval?
Yeah. So what I did was I locked my credit score back in 2013, I think, or 14, something like that. It was old fashioned. So I went to Credit Karma. And there's no AI back then. Right now, AI, you can ask ChatGPT, right? But back then, like I found like how to lock your credit score article in Credit Karma. And I'm like, what is that? Not knowing. And I clicked on that. And then they were 1-800 number. And then for 3 credit bureaus. So Ida is telling us, right? There's 3 credit bureau, like TransUnion. So I called their 1-800 number, and Experian, and then the third one I forgot.
Equifax.
Equifax, yeah. So I called their 1-800 number, the one that officially on that website, and then I talked to them and I explained, and then I did lock back then. But nowadays I didn't apply for bigger loan. I did last one, mine was back in 2023 when I was buying my vehicle. So that's when they asked like, hey, we can't pull your credit score. I'm like, oh yeah, right. I have to give you permission, and then it comes to my email, and then that's where I say yes, and then they can pull my credit score.
So, Leila, there are two different ways how they pull your credit. But if they pull your credit, they have to request, they actually have your permission. There is like soft inquiry called when they do not need your permission. They can just check your credit score, but it will not affect your credit score. But then there is a hard inquiry, which will go to your credit report, and you can actually see who requested your credit score.
Yeah.
And in terms of locking, so there is another question, like how do you lock your credit score? So like Janelle just told us, so you do call those 3 bureaus and you ask them to lock your credit score, and that is like best like action I would recommend you to do like after this call. If you do not need any credit card, you're not looking for any loans, call those credit bureaus and lock your credit reports. And you can always unlock when you're looking for a car or you're buying something, so that you can actually unlock and give the permission, but then lock it again so that nobody will use your social security or open the credit card on your name.
Got it.
And one more situation I told Ade before. So it was back also old times when I went to Kmart. I swiped my credit card. It was Capital One, and then it asked me. I was paying only was $6-8. So and then it asked me like, would you like to donate to Children's Hospital like somewhere? And I'm like, sure. I clicked, and then after half hour, I started getting email from Capital One. Oh, not email, sorry. Back then they used to call. So Capital One called me, and I'm like, yes, hello. And they're like, did you use your credit card back in Texas? Like blah, 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 paying O'Reilly, like auto parts, AutoZone. And I didn't have card at that time. I'm like, no, Texas, I'm in Pennsylvania. And I said, no. So they locked my credit score right away. So between that half hour, they paid around $400 out of my credit card. And they spend like couple stores about $400. So that's how I did caught. And then that's when I locked my credit report and everything. And it was that donation. That's how they scammed. They scammed the donation of Children's Hospital, those losers. And then my information my credit card information end up when I click yes. So, you know, I know it's scary. I mean, you want to donate, but sometimes it's scary.
Oh my God. Thank you for sharing all this story. It's
Sure.
really
Yeah.
appreciate that. That's very helpful.
Yeah, and in these days they are becoming very skillful. Very skillful.
Yeah.
It's sometimes it's hard to identify. Yeah.
Unfortunately, yeah.
So just be aware. Yeah, pay attention who you're calling from, where your credit card, and check diligently your credit score and credit card and your credit reports. Janelle, this was amazing. Thank you very much for
Sure.
sharing your story.
Yeah.
Yeah, I hope that
You're listening.
people learn from this experience, so hopefully nobody will have to go through this.
Yeah.
Yeah.